Pfizer announced their earnings this morning, and the earnings were positive. This company's been a rebound story, and it's hard to believe because this is traditionally a very strong pharmaceutical company. They were the company that stepped up and found a vaccine for COVID, and they did really well for a few years. They generated upwards of over $60 billion of free cash flow in those 2 years when they generated vaccines to help the world get over COVID. But since then, the revenues really dropped, and so did their stock price, and it became a rebound story. Pfizer's always been a high dividend paying company, and it's certainly the case now with the stock. I wanted to take a look at their earnings and see what's going on, see if we're headed in the right direction or if this stock's going to continue to really struggle. I'll take a look at their earnings and then I'll look at their financials. I'll run a valuation and then determine if I should continue to buy shares of Pfizer, just hold my shares, or sell my shares in Pfizer. Now, none of what I am sharing is financial advice. I'm not recommending you buy Pfizer. I'm not recommending you sell it. I'm just sharing my analysis, and I hope you find it interesting. So overall, Pfizer is a very well-known pharmaceutical company. And what's good about the company is they haven't stood still. They've continued to create new drugs and treatments. They're going to help a lot of people, which is good. It's also going to refresh their portfolio, which is very good. I really like their long-term vision of reinvesting in the business. They took all that cash as well as some debt they took on and acquired some businesses to make their portfolio even stronger. And I think the next 5 to 10 years, the company should be growing. Now let's take a look at their earnings. So it's July 30th, 2024, and Pfizer announced their earnings. The really good news is for the quarter, they've begun to grow their revenue. That's really good. And the reason why the revenue has been going down is they had a temporary sale of COVID vaccines. And that temporary event was really good to build cash, but it was not going to stick around forever. But now they're beginning to have compares where they can start growing. I think that's really going to change the perception and psychology around this stock if you see the stock grow. Again, I really like their forward opportunity with all the different drugs that they're going to come out with and the companies they've acquired. So I think that's a really, really good milestone for the company. Overall, they continue to drive really good free cash flow. They pay a really nice dividend, and I'll get to that in a few minutes. Overall, they improved their guidance. They increased the revenue guidance by $1 billion, and their earnings per share, they improved as well. So they beat and raised their guidance, which is a very good sign. After announcing their earnings, the stock in the pre-market has gone up 0.75%. So a modest little rise to the stock. The stock overall is $174 billion in market cap. They do about $55 billion in revenue. Their forward PE is really low at 12.15%. 12.15. And I like that. If I look at the fact that if they can start to grow, that PE should double. It really should be an opportunity for this stock to really go up. The company pays a 5.47% dividend, which is a really high dividend rate. Analysts believe that it's a buy and that it's discounted by 12.3%. So that looks good. Historically, when we look at the stock price is traded close to $60 per share, and now it's down to 30. So back to my comment on the PE. If the PE can double, the stock price can double, in my opinion. But as you can see from 2021, when it was deemed that, hey, COVID isn't going to be around forever, we're not going to need vaccines forever, the stock really sold off. And it never hasn't really had a long-term rally for a while. Another thing I would point out is this company is bigger and has more cash. It's just stronger than before 2020, before COVID. But in those days, the stock was trading upwards of $37 a share. Now you're getting a bigger company 4 or 5 years later at a discount. So I think it's an opportunity to look at Pfizer. When we look at their financials, you can see where the COVID years really pretty much doubled the size of the company if you compare it to 2019. And now the company still is bigger. If you look at 2023, they're much bigger than they were in 2020 and 2019. But those COVID years are what throw their financials off and probably throw investors off. The piece that I'll point out that is really interesting is I really look at free cash flow. In this company, when you look at the cash flow they were producing before COVID, they were producing about 10 billion, 12 billion in free cash flow. Once COVID came around, they developed the vaccine, they produced a lot of free cash flow. They produced a whopping $56 billion of free cash flow. And they did good things with that. They took it and invested in the business, which is really good to see. They acquired a big business that is going to help with certain cancers. And I think that's going to generate really good cash flow, future cash flow, and really good revenues for Pfizer. 12 analysts cover Pfizer, and they believe it's a buy and that it's discounted by 12.3%. I'm willing to bet that they're going to probably increase their price targets because the company beat on earnings, raised their guidance. So that should raise the price predictions of these 12 analysts. But at this point, before they've had a chance to update their information, they're showing that it's probably discounted by 12%. And as we look at their earnings per share, their projection this year was 2.37, and I believe Pfizer raised their guidance, so it's going to be above that. And then next year, it's supposed to grow 16%, 6%, and then 4%. This guidance looks okay. I think it's going to be better than that because Pfizer has a really strong portfolio of drugs that are just now becoming sellable, and they're going to have additional drugs and treatments approved by the FDA in the next couple of years. So overall, they're going to have a really nice growth trajectory in the next couple of years. So I think they're probably going to surprise to the upside on earnings per share going forward. I like to look at a company and determine how desirable is that company? Do they operate in an industry where they operate like a really strong monopoly and can command their own price, have very high profits, and have free cash flows? Or are they subject to excessive competition and therefore revenues go down over time, profits go down? It's just really tough to really make free cash flow in those industries. So let me make that decision around Pfizer. Pfizer is a pharmaceutical company. And what I like about pharmaceutical companies is that they do the science to then discover a drug that's going to help people and they earn a patent. They also have to go through FDA approval, and that takes a long time. So both the patent and the FDA approval, and then really becoming mainstream, that has a network effect. So pharmaceutical companies become really, really valuable. That's why Pfizer has a big market cap. And you have other companies like Eli Lilly with even a larger market cap. So Pfizer, I don't put them on the upper part of the green quadrant, which is the most desirable. I would put them kind of like straddling both the gray and the green. And the reason that I give them a combination is that in certain markets for pharmaceuticals, Pfizer definitely has a lot of power and they have new drugs where they're the only ones selling that drug. So people that have an illness or a condition will have to buy it from Pfizer. That's really strong. But in other markets, they have a lot of competition. For example, they're getting into the weight loss drug market. And that part of the market, there's already a couple of competitors. So when they enter into that market, they'll probably just have a drug that competes with others. It'll probably make some money, but not as much as where they're the single drug that really helps patients with a particular disease. So I'm going to put them there. It's still a desirable company for me. They have, I would say, a moderate to wide moat, and the strength is really strong. I like that Pfizer's been putting a lot of capital into their R&D to develop and discover better drugs, new drugs to help people and really grow the products that Pfizer has to sell to the marketplace. Now I'm going to value Pfizer by looking at their free cash flows and getting a net present value, all the cash flows they're going to produce in the future. I'm also going to look at earnings per share and value the company by using earnings per share. Let's start with free cash flows. I think that a good starting point for this company, based on their historical information, is to start at $9 billion and then grow by 10% for the first 4 years. Terminal value, I'm going to grow by 4%. Those are all cash flows beyond year 4. I'm going to use a discount rate of 8%. And the intrinsic value of all those free cash flows based on that data is $246 billion. I'm going to add cash on the balance sheet and take away debt to get to an equity value of $188.6 billion. And the market cap currently is $174 billion. So there's about an 8% discount on Pfizer if you look at free cash flows. Now, this is a conservative forecast. If the drugs that they've taken to market work out, you could see 50% more free cash flows, and that's really going to change the valuation. But I think it's good to be conservative and have a good starting point. Looking at earnings per share, the company just guided up. They just moved their guidance up. So using the lower end of their guidance, which is $2.45. I'm going to raise their PE to 18 since they're beginning to grow. I think they deserve an 18. Eventually, I think they're going to get to 24. The growth rate is going to be 15%. And I get to a estimated stock based on earnings per share, $50.72, but their current stock price is $30.72. So there's about a 65% discount using earnings per share. When I combine the two, put more weight on free cash flow, there's a discount available on Pfizer of 27%. I think this is a conservative valuation and a good one. And I think that it really gives me a reasonable discount on what I think is a very good company. So, should I buy more shares of Pfizer, just hold my shares, or even sell my shares? Well, I think I'm getting a very reasonable price on a very good company that has a lot of upside potential. So, I'm going to buy more shares of Pfizer. I really do consider them a very good company to own long term. I think it's been misunderstood. I really like that the stock sold off so much and the price has really come down. I think it really presents a very good proposition for me as an investor. So I'm going to keep buying shares in Pfizer. I hope you found my video interesting and I appreciate you watching.